complete this, and then we will see what we will make sure that we will continue the quizzes. Is it right? Tomorrow morning I will start lecture 9, financial assets and liabilities. Okay, financial assets and liabilities. Tomorrow morning I will start. Coming to the point, just we have, I will refresh it, where we have stopped. Is it right? What we have done about the various different internet, what are the other standards which are going to work it out. The other standards are exclusively what we have done with respect to International Accounting Standard 41, biological assets, agriculture produce and other assets. Is that we have talking in terms of IS to inventory about lower the cost and net realizable value, and most importantly we have taken the IFRS 13 fair value measurement and the IS 8. Now just for a review, I just want to know when we will do impairment and when we will do amortization. Any idea?
Impairment when the recoverable amount more than carrying amount.
Okay, next. Good. I'm telling you in which situation. Is it right? In which situation we do impairment and amortization. What is the basic condition? Very, very, very important. Very, very, very important. When we do impairment and when we do the amortization. Don't waste time. It is known, yes or no? I am here to tell you.
Impairment in tangible assets and amortization in intangible assets.
I think it is right. Anything else? Anything else? Very fast. Yes or no? Don't waste time. Amortization is done when there is a finite life. Is it right? Amortization is done when there is a finite life. Impairment is done when there is an infinite life. This is the basic core condition. The moment you have finite life, you have to do the amortization. Subsequently, we have to do straight line method or return down value method as per the requirement. Okay, as per the requirement. Write down this. It's very, 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 very the basic condition as such for impairment and for amortization. Other things will come next. Whether you have the carrying value, book value, all those things, that is the second stage of working. Is it right? The first stage of working is, if it is a finite life, it is amortization. If it is an infinite life, it is a impairment. Fine? Just I want to make sure that you should keep, you understand, very simple. Okay? Again I will ask the basic questions with respect to all. Okay? What it says? It says that inventories IS2 requires inventory to be valued at the lower the cost or net realizable value. This is the basic condition. Okay, this is the basic condition. Lower cost, is it right? Lower cost or net realizable value. Again, I am making it way. After this, you will get LIFO, FIFO. Is it right? They don't mix LIFO, FIFO at this stage. This is here. It will end. Done. This is what we are talking about in the financial accounting. Okay. Cost includes all the expenditure, including bringing the items to their present location and condition. That's good. Which of the following would not normally included in the past part of cost of inventory in the manufacturing business? Which of the following will not include? See, what you are doing, you are talking in terms of cost of inventory. When we say it is a cost of inventory, what is the first is that you will have cost of transportation. Cost of transportation, is it right? Cost of transportation, where is that? Is it right? It is otherwise called as carriage inwards. Fine, it will be added. Okay, it will be added. It will be added. Fine, what they are asking, which is not normally. Which is not normally means the first one is added. Is it right? Whichever option is the first, is it right? Cost of transporting finished goods to customer premises. 1 minute. No, sorry. It is what? Cost of transporting finished goods to customer premises. This is related to what? This is related to sales, not for purchases. Is it right? Cost of inventory is purchases. This is called as carriage outwards. Is it right? This is called as carriage outwards. It will not include. Is it right? This is related to sales. This is related to sales. It is not going to be related to purchases. Fine. Storage or cost of raw materials stored at the premises of the third party. Okay. This is what will happen. The cost of inventory. The cost of add to the cost of inventory. Is that add to the cost of inventory? It is included. Is it right? It has to be included. Next, discounts allowed for prompt payment by customers. Is it right? Discounts allowed for prompt by customers means what? It is sales or it is purchases? It is related to sales or it is related to purchases? Discounts allowed for prompt payment by customers. It is related to sales or it is related to purchases? It is related to sales. Is it right? It is also, it is related to sales. It is related to sales. Fine. Discount received for bulk purchases. It is related to what? It is related to inventory. Is it right? Now, cost of transporting finished goods to customer premises, it will not be included. It would not normally be included as a part of cost of inventory. Fine. In the manufacturing business. Next, it is not only storage cost of raw materials stored at the premises of third party. Is it a storage of third party? Still we have here what happens? We are not sure. Is it right? We are is it still it is not in process of manufacturing. maybe they will see they have the storage cost of materials, is it right? Which materials we don't know, is it right? Which materials we don't know, is it right? Means again this is not included, is it right? Discount received for bulk purchases of inventory, it will be what? It from the purchases, is it right? From the purchases minus discount received, is it right? Discount received, is that this is the only one which we are going to include because it is directly related to purchases. Other things are not related to purchases directly. 1, 2 and 3. Okay, is it clear? Next, can I go to the next one? What it says, is it? They say that the cost of raw materials, is it right? The following costs relate to the units of goods. Fine. Cost of raw material. Cost of raw material is how much? Cost of raw material is 1. Okay. Production overheads were incurred during the year. How much? Good. Fine. Is that production overheads? Fine. How many units are there? Production units are 10,000. Is it right? This is what it says. Is fine. Okay. Cost of material. Direct labor is how much? Direct labor is that this is cost per unit. Okay. This is cost. How much direct labor? This is 5. Is it right? Now, production overheads. Add production overheads. Production overheads. F5 management accounting. Okay, little bit you will have to be recollect. Okay, how much is there? 60,000 units. Is that right? Is that 60? See, production overheads were incurred. 8,000 units were produced during the year, which is lower than the normal level of 10,000 units. This was as a result of a fault with some machinery, which resulted in 200 units of being scrapped, 2,000 units. At the year end, how much is there? 700 units. What is the value of closing inventory? Is it? What is the value of closing inventory? When you are talking about the overheads, is it right? When you are talking about the overheads, there will be two types of overheads. One is fixed overheads, one is variable overheads. They have made it very clearly that the overheads are for how many units? The overheads will be for 10,000 units. Is that the overheads will be for how many units? 10,000 units. Now, if we are saying like this, it means these overheads are going to be identified as fixed overheads. How much is there? Is that we are not going to take 8. See, the capacity is 10,000. You are manufacturing 8,000. That is fine. Is it? The normal level. Normal level means we have to account it for how much? We have to account it for full capacity. Is it right? How much you will get? You are going to get 6 per unit. Is it right? Now, what is going to happen? We are talking about the closing inventory. Is it right? First, we will make it a point that how much you have taken into consideration and what is the cost. First, you have to calculate the cost. Then you have to multiply with number of units with respect to closing inventory. Is that how much is there? It comes to 7.5. Is it at 7.5 per unit? Now, is that 2,000 scrap? We are not talking about scrap, all those things. Is it that what the requirement says? You have to calculate the value of closing value of closing inventory. Is it right? Closing units, is it right? Closing inventory units into cost per unit. Here the things which we have to be very cautious is, this is what it says. Is it right? The thing people what will do, they will say that the 60,000 divided by 8,000. Is it right? No, that is not the case. You have to take the total number of units. Is it normal level? They say very clearly what they have mentioned here. They have mentioned this is the criteria on which we are going to take dividing by 10,000 normal level. Is it right? Closing units are how much? 700. Is it right? Into how much? Into 7.5. It comes to how much, Rizwan and Shifa? How much? 7 sevens are 49. 49 plus 3,000. 49 plus how much? 5,000. 5,000. Not 525, my dear. La ilaha illallah. 5,250. 5,250. Is it? No. What is there? What is missing there? Something happened there. Okay, fine. No problem. No problem. 1 minute. Fine. No problem. We'll go to how much raw materials are there. How much raw materials is, something is missing. Okay, right now I don't want to go back. Okay, we will manage inshallah. Raw materials 5,000, work in progress 2,000, finished goods how much? 35. Finished goods usually sell for how much? 50. Okay, is it? Finished goods usually sell for 50. However, water caused by improper storage of inventory mean that 300 units of finished goods will be sold at 60% fine. Okay, of the normal selling plus less cost. Less cost to sell, means expenses. Is it right? 5 per item. A further 5.5 per unit is still to be incurred to finish off the items of work in progress. Fine. 1 minute. We will write it. Is it right? If you don't write, we will not have clarity. Fine. Okay. What they are saying? The finished goods. Is it right? The finished goods. The finished goods are. What is the selling price? What is the selling price? What is the selling price? Selling price is 50 per unit. Okay, 50 per unit. What happens there? There is a damage is there. Is it right? 50 per unit. So this is 25. This is 30. There nothing is there with respect to 25 and 30. Only the issue is with respect to finished goods. Is it right? Mean that 300 of the finished goods will be sold. However, water damage caused and improper storage of inventory will mean that 300 units. Is it right? 300 units of the finished goods will be sold at 60% of normal selling price. Is it right? Normal selling price. Fine. And less cost to sell is how much? Cost to sell is 5 per unit. Is it right? Cost to sell is 5 per unit. And further 5.5 is incurred. Is it right? Per unit is still to be incurred to finish off the items in work in progress. This is related to work in progress. Fine. This is related to work in progress. No. Fine. Good. That's fine. Nothing is there. Okay. Now. Fine. In accordance to IES2, at what amount the inventory be stated in the financial statements of 2005. 9. We don't have any problem with raw materials issues, is it right? Yes, I want to make sure that how best we can work it out. Fine. Step one, is it right? Raw materials, nothing is there, is it right? Raw materials is how much? Raw materials is how much? Raw materials is how much? 5,000 units into 25, it comes to how much? 25 into 5, 125, 3 zeros. Is it right? Put it as A. Okay, put it as A. Next, we have what? Work in progress. Is it right? We have work in progress. 1 minute. However, water damage by the finished good will remain 300 units will sold at 60% of the normal selling price to sell 5 items. A further 5.5 still to be incurred to finish off the items of work in progress. Okay, fine. Fine, good. Finish. Okay. Now what we have to do is work in progress is how much? 330. Is it right? Work in progress, they don't have any issue. They say that it is only related to finished goods. Is it right? This is literally important. What they say, 5.5 is still to be incurred to finish off the items of work in progress. How many finished goods are there? How many units of finished goods are there? Yes. Is that? No. See the thing. Is that? See the 1 minute. Finished goods are how much? Finished goods are how much? 300 has been damaged. Is it right? 300 has been damaged. 700 is this is damaged. Okay. This is damaged. Out of 1000, 300 is damaged, and these are the good units. Okay, these are the good units. Fine. Now, here the thing is there. That's what it says. Is that? Now, work in progress. Is it right? Work in progress. As of this time, nothing is there. Is it right? 2000. Work in progress 2000 into 30. Is it? We don't have any issue in work in progress also. We later come at the finished goods process. Okay. It comes to how much? It comes to the it comes to how much? 2 3s are 6. 2 3s are 6. 1 2 3 4 60. Okay. This is called as a B. Fine. Now, here the things will start. Fine. The finished goods. How much is the finished goods cost per unit? Cost per unit is how much? Cost per unit to sell. It is right. Cost per unit to sell is how much? Cost per unit to sell is 50. Is it right? Cost per. Next. Damage. We are talking about this finished goods. We are talking about the damaged one. Is it right? This is with respect to what? This is with respect to damaged ones. Okay. Now, next, what is there? You have the will be sold at 60% of the normal selling price. 60% of the normal selling price is how much? 30. Is it right? 60% of the normal selling price is 30. Next. Then what they are asking? What we are asking us? We are asking us the what is the amount of inventory, total amount of inventory. 50 is the cost per unit. Is it right? Next, we are not talking about the selling price. Is it? Sell at 50. Cost to sell is how much? Less cost to sell. Automatically that value will decrease. Is it right? 5. Is that minus further work in progress cost? Is that further work in progress cost? How much? 5.5. Is that 5.5? It comes to how much? 50 minus it comes to 39.5. Is it right? It comes to how much? 39.5. Is it right? Now, we are talking about the damaged goods. Is it right? We are talking about the damaged goods. Damaged goods, what is the value? Damage, how many is there? 300 units. Is it right? 300 units into 39.5. It comes to how much? 1 minute. 1 minute. 1 minute. Where is calculator? One minute, not 1 minute. Just 1 minute. Is that 300 39.5. Okay. This is okay. This is the damaged goods. Fine. Now what they are saying? They are saying that the 300 units, is it right? 300 units, 300 units of the finished goods will be sold at 60% of the normal selling price. Less cost to sell is how much? 5. Okay. Damaged goods, is it right? Damaged goods. This is the value of the normal case. Fine. When we say it is a damaged goods, what is the value of the finished goods? 50. It will be sold at 60%. It comes to how much? It comes to 30. Is that? It comes to 30 minus cost to sell. We are not doing any process as such. Is it right? Cost to sell is how much? Cost to sell is 5. Is that? It comes to how much? What is the damaged goods selling price? Damaged goods selling price is 25. This is This is going to be called as damaged goods unit cost, okay, into how many units are there? 300. Is that how many units are there? 300. If you take into 300, how much it will come? 25 threes are 7,500. Is that 25 threes are 7,500? We have to know what is the cost. What is the cost of good units and what is the cost of damaged units. Even for the damaged units, if the units are be sold, that has to be considered. This is what happened, point number C. Now, point number A is related to materials, 5,000 units. Point number B related to work in progress. Point number C related to what? Related to damaged goods. We have done this for our own understanding, okay? 50 minus 5 minus 5.5. Now, there is a finished goods. Is it right? Finished goods, good conditions. Is it right? Finished goods, good condition. How much is the finished goods, good condition? 700 units. Is it right? 700 units. 700 units into what is the price? What is the price they have made? 35. Is it right? 7 threes are 21. 7 threes are 21. 21. How much will get? 21 and 1,750. 35. How much will get? 700 into 35. Yes. 35. 24,500. This is point number D. Fine. See, what they are asking you, in accordance to the IES2 inventory, lower the cost of net realizable value. Fine. How much is the net realizable value? Net realizable of the damaged goods also we have to take. Is it right? Now, if you take into consideration the amount of inventory, if you take into consideration the amount of inventory is A plus B plus C plus D. Is that 125? Is that 125 plus 60? Is that plus 60 plus 7,500 plus 24,500? How much you'll get? 12 plus 5, 17, 1, fast, 10, 11, 217. Is it right? It is 217. This we have to consider, this we have to consider, this we have to consider, and this we have to. Now, see the things. Listen carefully. We have calculated 39.5. Is it right? We calculated 39.5. I am putting with this is what we are learning. Calculations is not important. Judgment is very important. We are calculating 39.5. I am writing here. Is it right? I will putting the star mark. We have calculated 39.5 and we have calculated 25. Damaged goods. Okay, damaged goods. What as per IAS2, what you are doing? We are taking the lower cost. Got my point? This is the point of understanding. People, you will ask me why we have done 39.5. The reason we have done 39.5 is you should compare lower cost or net realizable value, whichever is less. Whichever is less, we have to consider as per IAS2. That is the reason. Understand point? That is the reason we have taken 25 into consideration. Is it right? This is as per IAS 2 rule. Is it right? You will ask me why you have done, why we calculated? We calculated only to make a comparison. Is it clear? Is it clear? See, these are the tricky questions. Is it fine? These are the questions which really makes you to understand. Is it? This is the point of understanding. Is it? We are not talking about, we are not concerned about the calculations as such. Is it right? We are concerned about the why they have given 39.5, why we have taken 25. Right? Then only it makes sense for us to understand the point. Okay? Next. What it says? Jack owns 1-year-old herd. Is that? This is IAS 41 agriculture. Biological plant, biological assets, agriculture produce. Herds. 1-year herd cattle on January 6. Recognized in the financial statements as how much? 140. As of December, this is what? See, 1 minute. You write down. See, the moment, I am very particular about this. 1st January 2006. Is it right? 1st January 2006. How much is the value? 140. Is that 140? On 31st January 2006, what is the value of the cattle? 170. Is it right? 170. The fair value of 2-year herd cattle, the fair value of 2-year-old herd cattle is 170. Cost to sell is how much? Cost to sell is, see, 1 minute. Is recognized financial statement. 31st December, the 1-year-old herd is this much. Fine, okay, fine. Fine. From this to this, it became 2 years. Okay. Here it was 1 year old. Is it right? Here it is 1 year old, and here it is 2 year old. Okay. Because of 1 year, 2 year, 1 year growth. Is it right? 1 year growth. The value of the herd has been increased. Fine. Now, what is the cost to sell? Is how much? Cost to sell is 5,000. Fine. What is the correct accounting treatment for the cattle as according to IAS 41? Is it right? 41. How much is there? Fine. Is it right? Good. Cost as on 31/12/2006, 170. Okay, very simple. Less selling cost. Is that cost to sell? Is that cost to sell? How much? 5,000. Is it right? 165,000. Is it right? 165. This is the revaluation cost. Is it right? This is the, what is the cost? This is the fair value. I can put like this. Is it right? Now, what is the cost? Cost is how much? Cost as on 1st January 2006. 140. Is it right? 140. How much is the 25,000? This is the gain. What is the answer? Revalue to 165, fine, taking the gain to OCI. No, they are on a one, they are talking about agriculture, they are talking about the cattle business, is it right? They are talking about the cattle business. OCI will not come, other comprehensive income will not come, it is right? This is not come. Why this is not coming? Because OCI is OCI is not relevant here. Is that not relevant here? Because OCI is other comprehensive income. If you are doing core business and you are doing something from, excluding something different from the core business, then OCI will come. Revalue 165, taking gain of 25,000 to the profit and loss account. Revalue to 170. Why we will revalue 170 is not there. Revalue to 170 not there. It is not 30 gain. It is 25 gain. Is it right? It is not 30 gain. It is 25 gain. The answer is this. Okay. Fine. Next. Which identify which of the following will be accounted under provision of provision. What they say, it is a biological assets. Is it right? Biological assets, and it is the agriculture. It is a agriculture produce. Is it? Sheep is a biological asset. Is it right? Wine is not. Wine is not even. You cannot put it in a no. Is it right? Wool is a biological. It means it comes from where? It comes from the sheep. Is it right? Wool is a biological assets. Are you clear about this? Fine. Okay, next. What we will do? We will see it. We will start new lecture tomorrow. Financial assets and liabilities. Okay, will start fresh. Fine. So I will not take that into consideration right now. We have done that section B was there somewhere. We have done is section B. Is it right? We have done questions there. Is it? Is it clear about this? We have done till. Have you start revising little bit? Yes or no? What happened? Yes or no? No. Alhamdulillah. Rizwan, you have to be you little bit. Okay, we have to little if little bit fast we have to go. Okay, little bit, but I will not compromise on understanding. Keep it in mind. I will make it a point that we should understand. That's very important. Otherwise, doing 10 problems and not understanding even 5, there is no use of doing it. Okay, fine. So tomorrow we will start financial assets and liabilities. Today we will do this. Little bit. Spend 15 minutes, 15 minutes, half an hour just to revise it. Is it right? That's very important. Fine. Now, what it says, which is related to what? Yes. Is it right? The will drop. Can I start now, please? Respond has to be very fast. Yes. Yes, Rizwan and Shifa. Fine. Okay, good. Good. Is it? What they are saying, first we will read, okay? Just we are going against the rule, but we just want to have make it clear. There are three projects are there, okay? There are three projects are there. They are talking about what? They are talking about the things with respect to intangible assets, okay? What are the conditions of intangible assets? We have to make sure, okay? They are talking in terms of intangible assets here. Why I am putting is, the moment we will have this, we will be very clear. The project commences on one abandoned purchase transfer to Wilrop research projects. Is it right? Research and development cost. Okay. The project commences with this much amount, increase to this much, complete the project. The directors have confidence of the subject of the project. Is it right? Means again we are talking in terms of research and development. What is the rule? Research cost should be where we have to show research cost. Research cost, and where we have to show research cost. Research cost should be shown in should be expensed, and development cost has to be capitalized. When you are expensed, it is in the income statement. When it has to be capitalized, it has to be in the statement of financial position. Fine. Now, which of the following are required by IAS 38 intangible assets in relation to the amortization? I told you, that is the reason I asked you, okay? Is that amortization and impairment. Amortization and impairment. Amortization is for the finite life, limited life. Is it right? Whereas impairment is for infinite life. These are the conditions of intangible asset. Next quiz will be on this. Is it right? Next quiz somewhere it will be. Now, intangible assets. See when the intangible assets should be capitalized or amortized. What is the condition of identifying intangible assets? Tell me fast. Tell me fast. What? Yes or no? What is the conditions of intangible assets? If intangible asset is generated internally, is it right? Intangible asset is generated internally, we will not going to be identified. Intangible assets should be have the cost. We should have generated externally, and you have to pay for that. Then only it will be recognized. Okay. Intangible assets should be amortized over a expected life or not at all if the useful life is going to be indefinite. Is it right? Is it? Which two of the four required by in relation to the amortization of excluding goodwill? Is that? Interest should be amortized over the expected life. Okay? The moment, see, amortization and expected life. Expected life is nothing but you have the finite life. Is it right? You have the finite life. Or not at all if useful life is deemed to be infinite. Is that? If it is a finite life, is it right? It has to be amortized. Okay, fine, good. Keep it that one. Intangible should not be amortized but instead review for impairment, losses only. No, we have to make sure that intangible assets, is it right? Intangible assets are having finite life or not finite life. We cannot say that should not be amortized, but instead reviewed. No, it has to be make it clear that whether they are having finite, it will be there. Either one of this have to be there. Okay, either one of this have to be there. That is the reason. Is it? Now, intangible assets should be amortized on the basis of expected pattern of consumption over the expected future cost benefits. Expected future cost benefits means they know the timeline. Is it right? When they know the timeline, they know the life. Is it right? They are saying very clearly what they are saying on the basis of expected pattern. Is that the moment we say expected pattern, it is the timeline. Fine. Intangible should not be amortized or impaired and instead simply carry forward to the original cost. By saying this, it doesn't make any sense. Is it right? Both, first thing is should be amortized over the expected useful life and should be amortized on the basis of the patterns. Is it right? What is the right two answers? One, A and C. Is it? Which of the following are true in relation to I? These are the, see, you do this. It is a part of revision. Understand what? You can understand what are the preconditions and what are the revision. That is the reason when I am saying you have to come with preparation. When you are doing section A, B and C, you should be revised half an hour before the class. IAS 38 requires reevaluation. What they are saying, which two of the following are true in relation to intangible assets. IAS 38 requires reevaluation of intangible asset where the entity has chosen to revalue its tangible non-current assets. There is no relation to revaluation. See, there is no condition. Is that what they are saying? Requires revaluation of intangible asset where an entity has chosen to revalue its tangible non-current assets. We'll wait. We'll not go for the conclusion. IAS 38 does not permit the revaluation of any intangible. Does not permit. There's no rigid rule is there. Is it right? IAS 38 permits the revaluation only if there is a, this is the one of the condition. Active market. Is it right? If you read the clause of IAS 38, they say that it should have an active market. Okay, then only you can do revaluation. Fine. IAS 38 requires that initial recognition of must be at cost. As simple as that. When we say initial means it has to generate externally generated. Is it right? Internally generated will not have any cost. Understand my point? Is it right? Internal generated, is it right? Will not have any assessed cost. Okay? Assessed cost. Automatically should not be taken into consideration. Fine? This is one of the rule. Is that? This is one of the rule. Keep it in mind. Very, very important things. Is it right? External generate, it should have active market and it has to be identified as a cost as such. Answer is C and D. When you are giving the answer, you have to give reason and you have to relate it to the condition. Is it right? Relate it to the condition what we have done it. Fine. Now they gave you two conceptual questions and three theory calculation questions. Is it right? Now what it says, in accordance with the IS 38 intangible assets, what is charged to the statement of profit and loss account in respect to project 324? Fine. What is 324? What they say, first understand what they are saying, how much it has to be charged to profit and loss account. Profit and loss account, when you are saying it is a profit and loss account, it is a research cost, not capitalization. Okay, any amortization we have to take into consideration. Fine. Now what is the 324? The project commenced 1/4/2006. Is it right? It has been commenced on 1/4/2006. Okay. Next, with a cost of how much? With a cost of 15 million. Is it with a cost of how much? 15 million. Next, during the period incurred total cost of 15 million during the period 31st December 2006. 31st to how much? 1st to 31st December 2006. Okay. How much they have incurred cost? 15 million. Now on pro rata basis, means month to month basis. If it is pro rata means how many months are there? That's very important. Pro rata means how many, here how many months you have to take into consideration. From April to December, how many months are there? 9 months. Pro rata means on the basis of months. Okay, just write down pro rata. Is that based on usage of capacity? Okay, based on utilization. I put like this, based on utilization. UTILI, Allah Kareem. Based on units or based on months. Okay, pro rata. Fine. They have used 9 months. Now you see the things. On 30th June 2006, the directors were confident that the project met the capitalization criteria 38. The project can be completed and began to generate revenue from 2007. It is estimated that the project will generate revenue for 5 years. Is it right? Next, what they say? They say that, is that this is first one, is it right? On 1st of July, is it right? They say that it is successful. Is it, sir? It is successful. And from 1st of January 2007, it will commence production. What they are asking us, how much you have to charge to profit and loss account. Is that how much you have to charge to profit and loss account? Fine. For the year ended. See the things. Dates are very important. Okay, dates are very important. I am putting here as a solution. Is it right? It is more than enough. Solution for this. Okay, solution for this. Fine. How much is the cost? How much is the cost? Cost from 1/4 to 31st December. Cost is how much? Cost is 15 million. Is it right? Now, they have said that how much they have to capitalize after 3 months. Is it right? After, see, this is what? This is 12 months, 6 months. Is it right? This is 6 months. Is it right? How we have to know how much you have to capitalize it. Is it right? If you remove capitalized cost, it is a revenue cost. Is it right? If it is if you remove capitalized cost, it is a revenue cost. Less capitalization. Pro rata basis. Is that pro rata basis? They say. Now how many, see, capitalization from where? Capitalization from 17 to 31/12. 6 months. Okay. 15 million times 6 divided by total number of months are how much? 9. Is the total number of months are how much? 9. This amount we have to show where? This amount we have to show in balance sheet, statement of financial statements. Is it right? This amount we have to show in where? This is shown in the statement of financial position. Okay. Now, out of this 5, is it right? See the thing. They say that it will generate revenue by, it will generate revenue for how much? It will generate revenue for how much? It will generate revenue for next 5 years. Is that? It will generate revenue for next 5 years. Definitely on that, there is a finite life. Okay. When there is a finite life, you have to do amortization. Is that? You have to do amortization. Is that? How much amortization we have to do? That is that? How much we have to do amortization? How much is the capital cost? We have to do amortization on capital cost, capitalized cost. Is it right? Capitalized cost is how much? 10 million. Fine. Is that? Capitalized cost is how much? 10 million. Yes. Capitalized cost is how much? 10 million. Now, is it? When they are, see the things, when they are closing the year, they are closing the year on 31st March. Is it right? They are closing the year on 31st March. Means amortization is to be done. Is it right? Amortization to be done for how many months? For 3 months. Is it? Amortization should be done for how many months? 3 months. Okay. Now capitalized cost is how much? 10 million. How many years are there? 5 years. 1 by 5. How many months are there? 3 by 12. Understanding? Make it clear. See, 10 million is the cost. I am not writing because it is in recording. Okay, you have to work it out. Otherwise, you can write on your notes. Is that 10 million is the capitalized cost? How many years it is going to generate from 1st January 2007? From 1st January 2007, 1/1/2007, it will be generated for how many years? It will be generated for next 5 years. Okay, now we are preparing the financial statements on 31st March. Is that 31st March? Means what is the time duration we are having here? We are having the time duration of how much? We are having a time duration of how many months? We are having a time duration of 3 months. Is it right? If this is what amortization, is it right? Minus. Is that minus? How much you will get? Is that you have to add? Is it right? We have to add to the profit and loss account. Is it right? How much is there? How much you will get? 10 million into 1.5 into 3 by 12. Fast. How much? 0.5. Good. 0.5. How much is there? 5.5 million. 5.5 million. This is going to be shown in the profit and loss account. Answer is what? Answer is 5.5. Is it clear? Conceptual question. Is it? You have conceptual question, you have application question. Both will go side by side. Okay. IAS, in accordance to IAS 33, intangible assets, which of the following are true or false in respect to the accounting treatment of 325 and 326? The cost of project 325 should be expensed in the profit and loss account for the year 31st March 2007. What is 325? The project commenced on 1 September. Cost is 20,000 per month. Was incurred when the project was abandoned. The special equipment that has been purchased for project 325 was transferred to another Wilrop research project. Done. That closed down there. Is it right? Yes. Now, they have incurred how much? 20,000. Incurred till when the project was abandoned. They have not continued. They have abandoned, means it is in the research stage only. They have closed the project. Is it right? And the whatever the equipment is related to that equipment has been transferred to another research project. There is no development. If it is in the research stage, it is profit and loss account. If it is in a development stage, it is the capitalized balance sheet. Okay? They are very, very simple. Is that very, very simple? That's what it says. Is that the cost of the project should be expensed in the profit and loss account for the year how much? 20. Because yes, why? Reason. Write the reason. That's very important. Because during the research stage only, is it? During the research stage only, it has been accounted. Is it right? It has been accounted. Automatically, we should not take it into balance sheet. Fine. That's very, very simple. The specialist equipment which was purchased for 325 should not be depreciated as it has been used in abandoned or research projects. Is that what it says? They say that, see, the depreciation has to be done. There is nothing like you should not do depreciation. Why we will not do depreciation? In the middle of the project, it will become successful. Is it right? If you are talking about a specialist equipment, what the IS 16 says, it will 16 says that the moment you start using a property, plant and equipment, it has to be depreciated. Is that this equipment is going to be used in the project? Is it? Then, irrespective of its abandonment, you have to depreciate it. Otherwise, how you will account? Is it right? It is expense. Is it right? If it is an expense, it has to be accounted. What they are saying, the specialist equipment which was purchased for 2003 project 325 should not be. Never. Where you will show if you are not going to show this? Is it right? Where we are going to show? If we are not going to show this, somewhere we have to show, and the only place where we can show is in the profit and loss account. The cost of project 326 should be included in the assets in the statement of. First we will see what is 326. The project commenced on 1st January. Cost is 40,000 per month. Incurred until 27, when the increase the spend to 60,000 to complete the project quickly, as a potential buyer has been identified. The directors have not been confident of the success of the project until this point. If you are not confident of the success, is it right? It is in the research stage. Is it? If it is in research stage, it has to be included in profit and loss account, but not in statement of financial position. Is it? But not in statement of financial position. Okay. Fine. During the year 31st December March 2008, will Rob incur the following cost? Yes. What is the intangible assets rules? Okay. Intangible asset rules are very important. Okay. I will ask. Is that? Accordance to intangible 38 intangible assets. What is the intangible assets? What to have to include, what it should not include. Is it right? What it should be include and what it should not include. Include is cost if purchased. Okay. Not include is internally generated. Not include is training cost, any staff cost. Okay, internal cost should not be included. 40,000 in staff cost incurred in updating a computerized record environment for the potential customers. Is it right? What they say? Their staff cost, is it right? See very clearly, staff cost should not be included. 100%. Is it right? Staff cost is not to be included. It is a part of the system they are doing. Okay. There is no point of that is. This is the rules. Is it right? You just keep these rules into consideration. Which of the next? 8,000 for the purchase of domain name. They are paying this. If they pay any amount, if you are paying purchasing, it is part of intangible asset. 4 million patent purchased to improve production. It is part of intangible assets. Is it right? Means answer is what? Are you clear about this? Fine. Borrowing cost. Is it right? Borrowing cost. Just recollect. Before I start, I will tell you. If you are borrowing, Fine. Okay. Yeah, whenever you have that concept, just tell me. No problem. Okay. Fine. Good. You have taken. If is it right? Fine. What they are saying? Borrowing cost. See what is the concept of? First, understand little bit. I'm taking 2 minutes to revise the concept of borrowing cost. Is it right? When we are talking about the borrowing cost, is it right? Borrowing cost. If borrowing cost has to be uh, has to be whether when you have to capitalize and when you have to expense. Okay, when we have to show it as expenses and when we have to show it as a capitalization. Okay, pre-operative and post-operative, and borrowing cost has to be amortized. Is it right? How is it amortized? Means you have to reduce how much, when, to what extent we have months. Okay, before the commencement it has to be capitalized. After the operations, after the your operations has been started, it has to be expensed. Okay, that's what it says. Now we have done, if you remember something, if you borrow amount, you may have invest for 1 month, 2 months. We have done in lecture. Okay, we have done in lecture. We have invested in 1 month, 2 months, 3 months. Okay, you will get interest received. You will pay interest. You will get net borrowing cost. Okay, remember, is that these are the conditions of the borrowing cost. When they ask you questions, they will focus on these points only. Okay, now we will cover that. Apex received 10 million 6% loan. When they have received, see, when they have received it on 1/4/2007. Okay, 1/4/2007. How much they have received? 10 million. Okay, at the rate of how much? At the rate of 6%. The loan was redeemable at a premium, which means that it has an effective finance cost. Effective finance cost is the current cost. Okay, effective finance cost is the current cost. What is the current cost? 7.5%. The loan was specifically issued for finance the building of the new store. Fine. Construction, yes, very simple. 1/4/2007, they have taken the loan. 1/5/2007, there is a commencement. Is it right? This they have taken the loan. Is it right? Taken the loan. This is the commencement. And when they have completed, when they completed on 28th October, 28th February 2008. Fine. Dates are 5, 6, 5 to 12. How much? 8, 9, 10 months. Is it right? They have taken how many months? 10 months. Fine. They have taken how many months? 10 months. Fine. Good. Effective rate of interest. These two are very important. Okay. These two are important. Effective rate is 7.5%, and how many months? 10 months. Okay. Now, how should the loan be treated in financial statements of Apex for the year 31st December 2008? Is it right? Financial statements. Okay. When they say it is a financial statements.
Mister, we cannot hear you.
So sorry. Okay. So sorry. Is it now is clear? Is it audible now?
Yes.
Sorry, very, very sorry. Okay. I have muted during that 5 minutes break. Now I have muted it. Fine. I just wait. Okay. What are the conditions of the amortization borrowing cost? Borrowing cost up to amortization reduce it as you pay. You have to the loan amount will decrease. Very simple. Okay. As you pay, loan amount will decrease. Loan interest will also decreases. Okay. When it has been commenced, then only you have to capitalize it. Okay. The thing is that one. Otherwise, you have to expense it. If you are paying the interest, you have to show it in the income statement. They have taken they have borrowed it on 1st of 2007. Is it right? They have taken the loan on 1st of 2007. They have commenced on 1st of May. They completed on 28th of Feb. How much months they have taken? Completion is 10 months. Fine. Now, what they are asking us is that the loan was specifically issued for the building. Construction of the store is commenced on 1st of May and completed on 20th May, but did not open for trading until 1st of April. Fine. We have not opened it. That is not the case. Is it right? Now, how it has to be treated? That's in the financial statement. Is that financial statement? See, whenever you are talking about the loan, is it right? See the things. The duration of the loan is very important. Is it right? In the financial statements, whenever you take the loan, is it right? Whenever you are taking the loan, it has to be taken it as a liability. Is it right? It has to be taken it as a liability. We will never take on the present value. Is it right? We will never take into present value. We will never take the loan into a fair value also. There is no concept. Fair value is for assets, not for liabilities. Okay? Fair value through profit and loss is also we are not taking. Whenever we say, is it right? The loan amount has to be amortized. Is it right? That is the reason. Means how much you are paying, you have to show that much as a liability. Balance amount. Is that? Balance amount, finite life. Is that what is the condition of amortization? Condition of amortization will never change. Condition of amortization is if it is a finite life, we have to reduce it. Otherwise, if it is infinite life, it is an impairment. Okay? The answer is amortization of the cost. Fine. Which two of the following? See the thing. They are now you can understand the pattern what happening in the questions. They will give you concept, they will give application. Okay? That's very, very easy for us. I am going to do the same thing in the next week, not this next week quiz also. I am going to do the same process. Is that which two of the following? When they say two, 1 mark each. Okay, there will be 1 and 1. If you do 1 right, 1 wrong, you will get 1. If you do both the rights, you will get 2 marks. Okay. Which of the following statements regarding IAS 23 borrowing cost is correct? Borrowing cost must be capitalized if they are directly attributed to qualifying assets, 100%. If it is related to the qualifying assets, you need to what? You need to capitalize. There should not be any doubt on that. This is the one of the conditions of the IAS 23. Is it right? Borrowing cost should be ceased to be capitalized once the related asset is once it is completed. You should not continue. Cease means you have to stop. Once you have done, you have once the things are complete, again you should not capitalize it. Then it will go where? It will go to profit and loss account. Understand what? It will go to the profit and loss account as a interest expenses. Fine. 100% this one. Borrowing cost must be capitalized. They are directly related to non-current. This is not non-current assets, any assets. Is it right? It must be capitalized. if direct any non-current assets, it's not like borrowing cost must be capitalized, they are attributable to qualifying assets. No. Is that? Borrowing costs must be capitalized if they are directly attributable to non-current assets. See the wordings you have. See even see if you do, see, this is not nothing on any issue, is it right? Their wordings, we will not focus on that. Maybe, is it right? Maybe, is it right? Must be with respect to non-current assets. Is it right? We will while reading now, we will not focus immediately on that. Something very maybe automatically. It's not maybe. There is no may or maybe or the say. Yes or no, as simple as that. Is that whether capitalized, not capitalized? That's all. Borrowing cost should commence to be capitalized once expenditure is incurred on the construction. No, they should not be should also. It should. Whether you have to capitalize or we have not to capitalize. Accounting is very, very specific. Is it right? We are not going to have any confusion as such. We will not going to have any confusion as such. Is it right? What borrowing cost must be capitalized directly to the any qualifying asset. Is it right? Borrowing cost should cease, stop, to be capitalized once it has been completed. Fine. Now again, just I want to make sure. Is it right? Again I want to make sure. Okay. Now what is the difference? Borrowing cost must be capitalized. They are attributed to non-current assets. If you are taking for current assets, there is any exemption? No. Borrowing cost may be, no, not maybe, it has to, must be. Borrowing cost should commence to be capitalized once expenditure is being incurred on the construction of the asset. Should commence to be capitalized. Is it once there is a if and but should not be there in the conditions as such. Is it right? That is the reason we have to little bit tricky ones. Okay, little bit tricky ones. You may find both are same, but technically if you see, both are going to have a huge difference as such. Is it right? Next, how much should be recorded as finance cost in the profit and loss account for the year ended 31st March? Got my point? For the year ended 31st March. See the things. Is it right? See the things. When they have completed, on 28th March, is it right? They are preparing they are asking the questions for 31st March. Is it right? They are asking the question for 31st March. Fine. How much should be recorded in the profit and loss account for the year ended 31st March? How much they have taken the loan? I will put one line here. Okay. I will put one line here. I will put one line here also. Okay. Done. Fine. Solution. Total finance cost. Is it right? Total finance cost. 31st March 2008. Okay, how much is there? 10 million into, we have to take effective rate. Okay, 10 million into effective finance cost. Is that 10 million into 0.075? How much we'll get? 0.75 or 750,000. Okay, good. The moment I get message from you, I will smile. Alhamdulillah, it gives me fine. Good. How much is it fine? 1st May, is it right? First, they commenced from when? 1st May, and completed on when? 28th February. How many months? 10 months. Is it? How many months? 10 months. And what is the, is it right? 10 months cost. Take the cost for how many months? Only 10 months. Is it right? Is it right? How much is there we have to take? How much you have to capitalize? Capitalized for 10 months only. Okay, 750 times 10 by 12. It comes to how much? Good. Is it right? 625. Thank you. This is statement of financial position. Okay? Statement. This is capitalization. What is the profit and loss account? Profit and loss account is total finance cost. Is it right? Total finance cost is how much? 750. Is it right? Less capitalization. Is it right? Less capitalization. How much? 625. Is it right? Less capitalization 625. 125. This is the profit and loss account. $625,000. Sorry. Profit and loss account. Profit and loss account. 1 minute. Profit and loss account. How much profit and loss account? 125. Is it right? Profit and loss account is how much? 125. How much is capitalized in the, this is it? How much you have to capitalize in the statement of financial position? 625. Is it right? How much you have to capitalize in financial statement? It is how much? 625. Fine? Is it right? Next. Is it okay? Yes, Shifa and Rizwan. Fine? Can I take the next one? Apex decided that, where are you, Rizwan Sheikh? Yes, Shiva. Both are typing. Yes, I know. But just I'm asking, okay? Don't take my word seriously, fine? Just, yes, 1 minute, Sabar, 1 minute, I know. Last 250 we do, we complete 250, this section will be over, we'll stop. No, don't worry about Rizwan. Fine, don't worry, I understand. Okay, just give me Sabar, patience. Apex decided, this is the last question, okay? Apex decided not all the funds raised were needed immediately and temporarily invested some of the funds in 2007. Earning how much? Interest is how much? They have, this is what it says, is that they borrow loan, is it right? They borrow loan. Again, when I'm doing in the examination quizzes, very clear about this, is it right? It is revision I'm doing. Borrowing, you have borrowed loan on how much? You have borrowed loan on 1st of April. Is it? You have commenced. Is it right? You have commenced on 1st of July. Is it right? You have completed. You have completed on 31st of March. Okay? 2008. It is 2007. Okay? It is 2007. Now, what you will do? You will invest it. Is it right? You will invest it. What is the advantage you will get? Definitely your net borrowing cost, is it right? Net borrowing cost will decrease. Fine. Net borrowing cost will decrease. How should the 40,000, is it right? How should be the 40,000? Is it? See, you are making what? You are making investment. Is that? If it is investment, it is a investment income. Khalas. Net of the amount capitalized in property. No, we will never show it. This no, you cannot relate to property plant. See, that is a rule. If you remember this, if you are talking about interest expense, you have to net off against interest income only. We cannot cross classify the accounts. Okay, this is income related to interest. We cannot work out with property, plant and equipment. Is it taken to the statement of profit or loss as a investment income? We are investing this. Make it sure it is a investment income. Taken as a, no, it is not other comprehensive income. Is it right? It is not. This other comprehensive income is one-off income. Okay, once in a while income is, no, it is related directly to the investment. Deduct from the outstanding loan amount. We cannot deduct. It is the interest. Is it right? We cannot deduct it from the principal. Fine. We cannot deduct it from the principal. It has to be shown it as a profit and loss account as a investment income. Is it clear?